Is VeChain massively undervalued right now? Is it showing signs of being bullish? Well, today we are going to do a 2021 price prediction for VeChain. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Been trading currencies for over 15 years, but now focus on crypto. So let's dive straight in. So looking at VeChain, coin market cap, first of all, it's currently ranked at number 28. It's a big project. It's $6.75 billion market cap. Daily volume, trading volume is 374 million, which is actually quite low. It's like 5% of its market cap, but that can be a good thing and a bad thing. So we're going to look at that today from a price perspective. We did a video back on VeChain in August, and this is what I said in August. This was the video on YouTube. And we said we should be anticipating some type of pullback. If I bring up an annotation over here, I can just draw on the screen. We said we should be expecting some type of pullback and then a nice bullish move to the upside. And that's what we're going to look at today. And then we'll look at the macro picture. What is 2021 looking like for VeChain? And again, if you like today's content, like, subscribe, hit the bell notification. I appreciate you. So let's just get rid of this. All right, so let's dive into a live chart right now. All right, VeChain. Well, first of all, we've had this incredible move to the upside with VeChain this year. Boom. They've had this big correction. And what we said in the last video with this correction, it looked quite impulsive, right? As in, this is not a typical corrective kind of structure. So we said this looks like the first leg of the correction. We should anticipate 3 legs up for the second part of the correction and then a potential third leg, right? Third leg. Now, it might not unfold like this because crypto can be a bit crazy sometimes. With the recent price action of Ethereum and Bitcoin, we might see a different pattern unfold. But what we can predict with high probability, because remember, we're in a probability game, not a certainty game, is this part of the movement here, right? And it might just do a continuation, but at least this part, and then we'll have a nice look at the macro picture. So what I'm going to do is, again, the last video that we did in August, just bang on, right? We said in this price zone, I like to say this because, look, Fibonacci and Elliott wave are so powerful, especially in the crypto markets, because it just shows the psychology of buying and selling. It shows the buying and selling. And we said we should expect some type of price target here before we see a correction to the downside, right? That's what we should anticipate. And what did we get? Well, we got this correction to the downside. Like if I just get rid of this, we got this nice correction to the downside, which was here. This is what we were referring to. And it just unfolded textbook style, textbook. And if you haven't already, take my free Elliott Wave and Fibonacci masterclass. Is in the link below. I show you how to read the markets like a pro, where you can look at the market when it's looking like this and get a better buying opportunity and say, look, a pullback before a continuation. And that's what we've had over here. And that's what we're going to focus on today. And then we'll do the macro. We'll finish on the macro in terms of the price prediction for 2021 based on objective, non-emotional information, based on the psychology, the mass psychology of buying and selling. That's what we're looking at. So let's just do a quick update on this part of the market here first. Let me just zoom right the way in. Let me do it like this so we can get a nice clean picture of the chart over here. I'm going to bring it in like this. All right, so what we clearly got, this is textbook Elliott wave, right? And you'll see markets unfold like this, especially with big projects. And when they do, we want to pounce on that information and use that information so we have a stronger hand. Looks like a nice 1, 2, 3, looks like a nice 4, and then a 5. And then what we should anticipate is always a 3-wave correction. Now we've had it. I want to quickly do this for you because I'm realizing more and more, most people haven't a clue. I'm going to take the price a bit back, and I'm just going to move the data a bit further back so we can look ahead of time. I'm going to take it to this point here, right? Let's just say this was the point of VeChain and what we would anticipate. Why am I taking it back there? Because this is where we were. This is where we were. We were just before this point over here, and we need to look at we want information ahead of time, leading indications, so we can plan, we can prepare, we can set buy and sell orders, or just to pull the trigger with price notifications. Now, when you see a 5-wave sequence like this, right, like this, and then you get a pullback, this first leg down, which is bigger than any other previous pullback. Look at it, it's bigger than any other previous pullback. That's called an overbalance of price. That's one of the key first signals. It's a lagging signal, but once it's in a position like this, it tells us the market has likely reversed for a medium-term correction. And we're looking for always an A, B, C correction. And what we can do is we can project with very high probability. The book I was featured in, which was written by Robert Miner, he's a legend, by the way. High probability is high probability, not high certainty, high probability trading strategies. And he's one of the best technical traders on the planet. And he just uses the Elliott wave and Fibonacci. And I learned a lot from him. And it applies incredibly well to crypto. And what I'm going to show you here is the retracement. It's like magic. One of the reasons I'm so infatuated by it and use it, it's like magic, but it's not magic. There's method behind the madness, because humans are humans, and buying and selling psychology is buying and selling psychology, and it applies again and again and again. So typical corrections are 50, 62, and 78.6%. That's the most common, right? And we should always anticipate 3 waves. So this is the first leg, boom. Second leg, boom. And it's not that deep. You normally expect it a bit deeper, right? We can even check candlesticks, which shows the range of the bars. And they weren't even that rangy. I guess this part here pulled down a lot lower on the daily intraday data. But when we're looking at daily data, it's just cleaner to look at closing data. And I used line charts mainly to make it easier for you, to be totally honest. And then what we're looking for is a third leg down. Bang, third leg down. Typical A, B, C corrections ahead of time. So if you can shorten this, if you're taking profits, but also if you're looking to get optimal buying opportunities. So here's price. But that's not enough information. This is more of a macro picture we're looking at when we're looking at this kind of time frame. But there's a few other pieces of information that we can use. One of my favorite is time analysis. Got time analysis. Yeah, we can do some time analysis. Most corrections take 50% in time of the previous wave up. Like, what are you talking about, Jagier? Well, we were like, what are you talking about, Jagier? What do you mean 50% up? So the time it's taken to form this wave, boom, like in days, literally, like we're measuring time going horizontal. We take 50% of that and then project it forward. That's what this blue line is. 50% is 0.5 and there's 100%. We want to expect that the correction should be a minimum completion in this zone over here. So now what we can look at, and if we just unfold the data, this is important because it's going to give us the picture that's going to paint for VeChain. Right? We got a nice movement to the downside. Now at this stage, what we could do is we can narrow down the information a bit more. What we can do is we can go, again, I covered this in my free Elliott Wave and Fibonacci masterclass. If you haven't taken it, take it. It's free. I show you how to read the markets like this. Now, they don't always unfold like this, but when they do, we want to use this information. And 50 to 60% of the time, they will unfold like this. We can measure this wave A. So I'm gonna draw it out now. I'm gonna draw it out now that we've got this information. We've got this nice wave A. Looks like a wave B, and it looks like a wave C is forming. We don't know where it's going to complete yet. So we can put in, I like to put in a question mark to remind ourselves that we are in a probability game and not a certainty game, right? We don't know. So we're just projecting with high probability of what's likely to occur. So we've got this question mark here, very important, very important. As soon as you think you know exactly what's going to happen, that's when you lose, because you may overexpose yourself with risk. So now what we're going to do is 2 other things, right, to kind of really peg this, because this is important. Because you'll see these, when you see these ABC clean zigzags, you can really get in some very, very beautiful buying opportunities. So what we're going to do is we're going to do something called a Fibonacci extension. So we're going to measure this wave A, and a wave C, more often than not, is actually 100%, 62 to 100% of wave A. So now we can get rid of this 50% because we've exceeded that cleanly. And then we've got these 2 zones. And we're like, well, which one of these zones is likely to be the low? We don't know yet, but we know it's likely to be one of the two. One of the two. Yeah, that's the high probability. Remember, we're in a probability game, not a certainty game. What other information do we have? Well, more often than not, the time taken to form a wave A is often very similar to the time taken to form a wave C. And the maximum tends to be 1.618, right? So we know we're in this time kind of zone. You know, even if we narrow it down, the minimum 50% and the typical. So we are getting valuable information. We would look at the weekly indicator, but we're also looking at this daily indicator down here. We can see that it's bearish at the moment, even though it's in the oversold zone. And what I would wait for is the next bullish reversal will probably coincide with the low itself. That's valuable information. This is a momentum indicator. You can use different ones. My favorite is stochastics RSI because it's very visual, very visual. What other information can we use? Well, actually, that's more than enough. We got momentum, which we're looking at the bottom. We got pattern, which is ABC. We could go into a lower time frame to see if this wave C unfolds to a 5-wave sequence, which it often does, and that we can kind of peg it a lot closer. We got price, which are these two key price zones, and we're in this time zone as well. In fact, I'm going to keep it on this chart. Let's just see if it lets me jump onto a 4-hour chart. I don't know if it will take away the data. Oh no, it keeps it. Brilliant, brilliant. So we could jump into a lower time frame. This is a 4-hour chart, right? Even if we jump into an hourly chart, actually. Why am I doing this? I'll tell you. I know I'm getting into the detail. You know, in the timestamps should be, if you want to get straight to the price prediction, you can jump to it if you wish. But this is valuable information because wave C's often break down into a 5-wave sequence, right? A 5-wave sequence. And we can get really, really nice entry points when we see this. So this looks like a wave 1, a wave 2, a wave 3. We'll probably get a little wave 4 and then a wave 5 to finish off this 5-wave sequence. But we're not going to focus on that too much today because otherwise it'll get too detailed. But what I want to do is, if I just move this down a bit, I need to get back to a daily chart. There we go. Boom. So now I'm just going to unfold the data one day at a time. Boom, boom. Look at that. Bang. Now, look at this. The momentum indicator, the blue line is now clearly above the red. Now, you could add different entry strategies. That's a whole different video. But this is the biggest move to the upside, which gives us a good indication that we've got a trend reversal at a price, pattern, and time zone, right? So we've got 4 things: momentum, pattern, price, and time, telling us we are at the end what looks like an ABC correction, right? Again, we can't jump into like an hourly chart. When we see this, what we would have done at the time is we would have identified, look how clean this is. I need to emphasize this because a lot of people just don't get it. They don't get it. And if you get it, it just gives you it gives you an edge on the market. It gives you an edge. Not a guarantee, just an edge. But look at this wave 5, this wave C, look at this, 1, 2, 3, 4, 5, textbook. And what you could have done if you're trading, I mean, I'm not necessarily trading it like this, at this lower time frame, but I know many people are. When this part of the market occurs, this wave 5 low, which goes below this wave 3 low, what you could do is the first confirmation that this wave 5 is confirmed, not guaranteed, but a high probability, is exceeding the previous swing high. So this could be an entry point. Your stop loss, if you're using stop losses, it depends on if I'm talking to traders. Some are trading, some are doing different strategies over here, but this would be the stop loss just below here. So the risk exposure is very, very low for a very high potential return, right? So let's just jump back into a daily chart. So we would have seen it like this. Look at this. Look how tight that is. Look how tight that is, right? That's just incredible, incredible. So again, if you haven't taken my free Elliott Wave Fibonacci Masterclass, you need to take it because I put a lot of time and energy into it to make things simpler for you. So that's just the data from a week ago, and that's what we was anticipating. When I did the YouTube video in August on VeChain, we said, look, we should anticipate a wave B, and we should anticipate 3 waves, and look how it unfolded. Just textbook, A, B, C, right? In a pattern, price, time zone, and momentum. So now let's just clean this up. And let's get the data to today, right? Let's get rid of this. This was just more just showing you how powerful what we're using is. Very objective, mechanical, non-emotional information. So now if we just zoom in like this, we just unfold the data, right? This is what it did, bump, bump. Now in this case, we would have actually got stopped out, and then we would have looked for another entry point above the next swing high, right? That's just the name of the game, right? And this is the point that we're at right now. So it looks like this confirmation down here is the wave C of a wave 2. So we got this wave 1 up and a wave 2, right? And that's what we're looking for. We're looking for confirmation. So that would have been an entry point down here. This would be more of a confirmation. So where are we right now when it comes to VeChain? Well, first we want to go to the weekly. We're going to go to the top left. Big piece of information. The weekly momentum is bullish. Look, the blue line's over the red. So it means next 2, 3, 4, 5, 6 weeks, sideways to up. That's what we should anticipate. Sideways to up, right? Very, very important. Very key information. We go back to a daily chart. We've got this nice movement to the upside, a 5-wave sequence. I'm going to tell you what I believe that is on an intermediate wave count. Again, if you take my masterclass, you know what I mean by that. A, B, C, intermediate count. And then we're going to do, so that's a micro count. We're going to do an intermediate count there as well. And then what's likely to occur next. So now I'm going to zoom out for the macro, and then we're going to zoom back in. Because today's, it's all about, is it looking bullish? Is it showing signs of being bullish? What we want to look at is I'm going to go into the macro price prediction first. Because I know you love price predictions, right? You go, where is VeChain likely to go? Well, if this is a wave 1, and we do end up getting a wave A, B, C of some sort, and we get a correction finishing down here somewhere. I'm going to talk about this correction here in a second because there's 2 scenarios that may play out. And we don't know which one yet. But if there's a wave 1, wave 2 low, what typically happens with ABC corrections or after a wave 1, wave 2 is, I'm just going to put it like this so you get a nice clear picture. I'm just going to draw it here for now. Because right now we don't know if the wave 2 is going to be down here or down here. There's reasons why I believe it might be down here, but I'll show you that. But there's also conditions that will invalidate that also. But what I want to show you is when you see a wave up and then a wave down, you can actually project with high probability if this price is exceeded, which is 25 cents, give or take. The price projection typically for wave 3, if the low ends up being around this region, is 1.618 to 2.618. So for VeChain, the macro price projection for 2021, wave 3 basically, price projection for 2021 is, I've obviously done this one before. I've got this one, boom. I want to keep this one. I'm going to just clean this up for a second. Let's get rid of these. Let's get rid of this. The 2 price projections, 45 cents. 45 cents is the minimum, but we should anticipate an overextension of 69 to 70 cents. Now, in crypto land where gravity doesn't exist, especially in peak bull mania phase, we should anticipate and be prepared for an overextension. Often you'll see an overextension, especially in the 5th wave of a wave 3. In crypto, a lot of panic buying tends to occur. So be prepared, even though the high probability price zone, we are around 70 cents. Today's price, what is today's price? It's around 10 cents. So that's around, is that 10 cents? Is that right? Yeah, 10 cents today. That's a 7x, that's a 700% for VeChain, potentially. If it pulls, well, even if it pulls down lower, it might even go down to around 5 cents. So it might even be a higher, more like a 14x, 7 to 14x up to VeChain. But what we want to now look at is what's likely to occur over the coming weeks, right? Because sometimes on the macro, you can see what's likely to occur, but we may get ups and downs in between. Like, as powerhouse as VeChain is, who would have thought it was going to do this much of a pullback from 25 cents down to like 5 cents? That's a 75% pullback. It's a very, very deep correction. Key piece of information is this low. It's probably going to hold at least for the next 3 to 6 weeks. Doesn't mean it's going to, it's just highly probable. Why? Because the weekly momentum is now bullish. The daily momentum is bearish right now. And what I would personally wait for is the next bullish reversal on the daily chart, on this chart, which might take 3 to 5 days. In ideally a price zone Typical pullbacks for even this micro pullback, we should anticipate a minimum of 50%. It's the same thing that we did before, but more on a smaller degree time frame. And then from a time perspective, the dates for the next low typically should fall in the range, the date between the 15th and the 20th of October. Today is the 12th. Next 3 to 5 days, anticipate this zone. Now, if this low gets exceeded, we need to reevaluate. So that's always a possibility. So just know this. And then that could be the point that we see a move at least with high probability similar to this move over here overall. Now, I want to finish on something. And this one, look, it is what it is. VeChain, love it or hate it, doesn't matter. We're objective over here. We're just looking at price information based on buying and selling behavior. Buying and selling behavior. That's what Elliott Waves does. It doesn't matter if it's stocks, shares, commodities, doesn't matter if it's crypto, doesn't matter if it's Bitcoin or VeChain, doesn't matter.